Hold on, please.
Is Ben joining?
You are live.
Thank you. Thank you, everyone, for joining us at this meeting, the last meeting of the Audit Committee for the year. I'd like to call the meeting to order and ask that Pam certify that we have a quorum.
Thank you, Chair Wright. I'll
I'm here.
and you are here. Thank you. And Regent Porth.
Here.
Regent Wright, you have a full committee and quorum.
Okay, the first order of business is approving the Audit Committee minutes from May 9th of this year. I can make the motion. All I need is
I'll second.
and all in favor. I think we have a unanimous vote.
Yeah.
Okay, the discussion, I'm going to turn things over to Melinda.
Okay, so the first, good morning, everybody, first of all. The first item on the agenda is to provide an update on the audits of the auditors of public accounts. So this will be a relatively short update. The APA is currently performing the statewide single audit, which reviews and tests the compliance of grants statewide. So things have been relatively quiet as far as the financial side of their audits go. Central and Western fiscal 20 and 21 audits were published earlier this year and are posted on the APA website. Eastern began the audit of their fiscal 21 and 22 financials this week, and Southern, Charter Oak, and the colleges have not yet begun fiscal 21 and 22 audits.
Okay.
If there's no questions, I can move on to the year-end audit and discussion.
Rick, do you have any questions?
I don't have any questions.
Okay, we can move on, Melinda.
Okay, thank you. So as far as the year-end audit goes, this year the financial close for all three entities went very smoothly and timely. I had mentioned last meeting that the system office accounting team had been very busy working on the Connecticut State Community College merger and the transition of the Banner financial system, including a new payroll process. And, we hit a few bumps in the road, some of which are still being ironed out, but ultimately there was no adverse effect on the fiscal year 22 close. The GASB 87 lease standard was implemented this year. As we discussed, the GASB 87 requires that all leases that meet a certain criteria be recorded on the balance sheet, as there is no longer a distinction between capital and operating leases. As we also discussed, System Office engaged Grant Thornton's advisory team to assist with extracting and compiling data from the contracts and POs. But ultimately, we as management take responsibility for the calculations and the data collected by Grant Thornton, and we prepared the entries independent of that service. We had originally planned on early implementation of GASB 96, which is very similar to GASB 87, but for software instead of equipment. But due to timing constraints, we did not early implement it in fiscal 22, but we will be utilizing Grant Thornton's advisory team again to assist with that implementation for fiscal 23, so normal timing for implementation of that standard. To give you a little bit of a snapshot of what GASB 87, what kind of changes it made to our statements. System-wide, there was approximately 180 leases that fell under the GASB 87 standard. Considering the state's required materiality thresholds of $5,000 over the life of the lease, $5,000 over the life of a lease isn't a lot, and this threshold captured most of the copy machine leases in the system, unfortunately. Only 14 of those were real estate leases, and approximately 166 were copiers, postage machines, and other equipment leases. So in total, there's approximately 14.1 million in assets and 14 million in liabilities recorded to the balance sheet. So the impact to net assets in the bottom line was very minimal. And looking, kind of overall at a snapshot of the results of operations for fiscal 22, without including the effect of the pension and OPEB entries, unrestricted net position for our system has grown this year, which is largely attributed to increases in state appropriations and one-time funding, COVID-related grant funding sources, as well as decreased spending. This year, the unrestricted net position increased by about 86 million as a system as a whole, which is an increase of 39% over last year. And as compared to 5 years ago, we are up about 120 million in unrestricted net position without accounting for the pension and OPEB. So since 2018. The foundation financial statements, which are included as a component unit of our system financial statements, have all been received as of today. All foundation financial statements that have been issued have clean, unmodified opinions. And last but not least, the 2020 bond audit fieldwork was complete during the summer. We have Colin Resnick here to give us an overview of that, and fieldwork and deliverables were timely and went very well this year, as it typically does. And that's all I have to report on. If there's any questions for me, I'd be happy to answer them. And I don't know if Ben wanted to add anything that I may have missed.
All I would add is how much I appreciate having an audit committee in the middle of December with all the audits complete and clean in front of us for discussion. I'm extraordinarily appreciative of that. I want to thank Melinda publicly here and the team from Grant Thornton. And it is a great pleasure to have gotten this far over the last several years. To the point where we have, I think, a much better control over our general ledger and much better ability to report in a timely and accurate way. So I'm very happy to be here hearing about that. Thank you.
And I want to add something, and Rick, you may not be aware of it. Since I've been on the board, since I've been on the audit committee, I think this is the first time that everything has come to fruition in a timely manner. And I want to thank you, Ben, Melinda, the rest of your team, and Grant Thornton. This was probably the most seamless audit review that I've seen. So thank you.
So Elise, it's Rick. I still haven't figured out how to turn my camera on, but I'm really interested in this conversation, and I wasn't fully aware of the progress we've made, and it is really encouraging. And have to say that probably has something to do with our staff too. And I want to say thank you for that.
Great job.
Thank you.
Next, do we turn things over to Claire?
Yes.
Okay,
Good
Claire,
morning.
you're up.
Okay.
Good morning.
Thank you. Well, I will say great results. We're excited to be at this point, at this stage in the month of December, and at this stage of the audit. And we'll provide you some highlights, but in the end, we're issuing unqualified opinions on the financial statements for all three entities, and we hope to do that sometime next week before everybody breaks for the holidays. So we'll have a December date on the report, which will be nice. And Rick, just for your benefit, in the past, sometimes it's been things that are outside of management's control, particularly around pension and OPEB, that have delayed the audit. But sometimes it's been some internal matters, cleaning up audit adjustments and things like that. But this year we really had nothing. And I would even say, Melinda mentioned they had to adopt a new accounting standard, which was, took quite a bit of time. And so it wasn't just like it was a quiet year, and forget about the new accounting standard, just all of the other things. That's probably noise level compared to all the other things that are going on within the system. So So I think it's a testament to the team, Melinda and her team, and Ben as well, and Mike, that they were very organized for us. I think at this point, it's been, I think, 6 or 7 years now, so we know the process, we know how to get through it efficiently, and and come to a good result. With that said, I have my 2 managers here with me, Chris Bradford and Dave Stoffel, to just very quickly go through the highlights of the audit process. So Chris or Dave, who wants to start?
Yeah, I can get us started, Claire. So I know everyone has the materials with our presentation. As Claire said, we're going to kind of go over it at a pretty high level. So moving into the audit status slide. So that's really, this is showing our audit status as of last week. I think since then, we've definitely gotten a lot of these items. So really it's at this point, just working through a few final tie-out type items, completing our tie-out of the statement of cash flows, and then just the day of issuance, doing any final inquiries, getting the rep letter, and then just kind of wrapping up the final partner and quality reviews. So we're in pretty good shape there in terms of open items as of today. Moving ahead to this significant risk slide, as well as the areas of audit focus. I don't think we have to go through each of these in detail. Overall, we executed all of these with our audit plan that we laid out during our planning presentation, and we haven't noted any exceptions. One specific area we wanted to highlight was our testing over the adoption of GASB 87. With this being a new accounting standard, something that was definitely an area of focus for us. Some of the procedures we performed was performing detail testing to test the completeness of management's analysis, just making sure that they considered all the leases that should be considered. We also selected a sample of leases in the analysis and tested the accuracy. So just agreed back to the underlying contracts, made sure the entries that management was recording lined up with those contracts. We looked at management's methodology and journal entries, and then also their memo. And then finally also just reviewed any disclosures in the financials associated with the adoption of GASB 87. And again, no exceptions noted based on any of those procedures. Everything else in terms of our areas of audit focus, again, executed in accordance with the plan, and we didn't identify any exceptions, but I'll pause there just in case there's any questions on any of those.
I have no questions.
No questions from me.
And the only other thing I'll mention as another area of focus is the federal funds. You know, this is your, I guess, technically second year really, of having significant federal funds in your financial statements, and it does have quite an impact on their financial results. I think, you know, Melinda alluded to it at the beginning, the growth in your unrestricted net position when you peel out the pension and OPEB accounting that can kind of mask some things. But I think, you know, it'll be interesting to see what 23 looks like without the significant federal funding. I know the system is working with the state to ensure that state appropriations are at the necessary level to continue to fund operations the way that you need them to. But it will be it will look different. The financial statements will look different next year for sure, from what they did in 22 and 21. But that was something that we did spend some time on, is making sure that you were using the federal funds in accordance with how they were supposed to be used.
Can I ask a question on that?
Of course.
By what process do we manage that money and make certain that we are in compliance in the way that funding is used. I appreciate the help that we're getting from our auditors. How does that work internally for us?
I can answer some of that. Initially, Rick, the net position, the adjusted net position that we treat as reserves is in fact a sort of a synthetic number. It is the unrestricted net position, which includes assets, cash and non-cash assets and liabilities. And then we back out the liabilities related to pension and OPEB in order to come up with a realistic number. We started doing that when they added in those liabilities into the GAAP financial statements a number of years ago. In truth, we have probably more cash available. I'd have to go and double check. The amount of reserves is different from the amount of cash we would have available at any given time to spend. Excess cash we have is invested in, the state STIF, the state short-term investment fund for the most part, in a couple of different ways. There's some reserves set aside for our bond program. There's just operating fund cash that is the cash from student tuition and fee payments and other revenues that we have. So the reserves are not, it's not a bank account with, $100 million in it that we have available to spend at some future time. It is our estimate of what our excess assets are that could be brought to bear to fund our activities with the consent of the board in the future. So if we end up having a deficit, an operating deficit in this year, for instance, I don't think we will, but were we to have an operating deficit, it would draw down on those reserves because it would reduce our UNP and would presumably also draw down on our cash because we would spend cash and that we didn't bring in revenue. But it doesn't, it really is it's not a direct reserve the way you might have in another context. It is an estimate of the amount of resources that are available to us. Were we to decide to fully expend those reserves, we would need to start thinking about cash more carefully to know whether we had cash to support that UNP. We generally do. One of the nice features about this is that individual institutions go negative from time to time. This happened Eastern Connecticut had negative reserves in, 15 years ago, 15 to 20 years ago, and dug their way out and reestablished positive reserves. This year, I note that the audit shows Western going from having a small negative reserves to being slightly positive. That's good. I'm not sure there's really a meaningful distinction between having a minus $2 million in adjusted UNP and having positive $1 million. Positive $1 million is better, but both of them are extraordinarily represent low levels of reserves and a need to begin to rebuild Western's financial condition. So it's not a direct measurement of cash set aside, but is an estimate of the available resources across the entire system, I think, more fairly described. I know, Claire, does that match your view of what those reserves are?
Yeah, that does, Ben. I think that was a helpful analysis of it. I guess I understood, honestly, and maybe I was mistaken, I understood the question a little bit differently, to be directed towards the how the federal funds, like the CARES Act and the ARPA money and the federal funding that you received, how it was administered and ensured that how the system ensured compliance associated with spending. But maybe I understood the question. I'm sorry.
Well, I just want to say thank you to Ben. It is helpful and clarifies some things for me. But to be honest, my question has mostly to do with due diligence. I feel like, we need to have that discussion briefly, just to make sure that we're all comfortable with the way we've managed those funds so that we're in
The federal funds, you mean?
Yes. Yes.
Oh, I'm sorry. I must have misunderstood the question. Forgive me. We've been, I believe that we have undertaken, I mean, Melinda's staff, along with some other staff from, the budget area and others, have been deeply involved in tracking the expenditure of various pots of federal funds. We have the HERF money, the Coronavirus Relief Fund, the ARPA funds. Some of them have been passed through from the state. The state has been, I think we've met all of their deadlines for reporting. We provide detailed journal level, individual transaction level support for all the federal funds that we've spent for the state, all the ARPA funds and coronavirus relief funds. And the HERF money, we have reported directly to the Federal Department of Education about how we spent that. Fortunately, those funds allowed us to bring in money essentially as a revenue to replace revenue lost from, the drop-off in enrollment during the pandemic. So the lion's share of the federal money that we got directly came into our finances as essentially a replacement for lost revenue from students, and that was the requirements for how that was justified to the federal government were relatively straightforward, and allowed us to justify in various tranches over the last several years the drawdown of those funds. Some of it was spent on specific stuff, and we've provided the transaction level detail and support of that to the federal government. We've also brought in some FEMA money as well. That's probably the most complicated to justify to the federal government, but to the best of my knowledge, we've been keeping up with all FEMA's requirements as we go. I know there's a couple of pending drawdowns from FEMA that we're still working on, but I think those are in the current year and don't have any bearing on the FY22 funding.
Thanks, Ben. I appreciate it.
And just to close the loop on that, from an audit perspective, obviously Ben and everyone in the system office is doing what they need to do to ensure compliance on the front end of things, so that there's no questions about how the federal funds are used. But also from an audit perspective on the back end, we do a financial statement audit. So we look at the federal funds and we look at, Ben alluded to the fact that a lot of the money was used as a revenue replacement. And the federal government had specific guidance on how you calculate your revenue replacement. And so we looked at how the universities and colleges calculated their revenue replacement to make sure that they were following the rules. So that, and so we felt comfortable with that. So that's been audited. And then Melinda alluded to at the very beginning, the audits of the public accounts or public auditors. They're doing an audit of the whole entire state that includes the system and specifically the system's participation in the federal funding programs, all of the COVID-related federal funding programs. So they're testing on a sample basis, not across the entire system, but on a sample basis. They're also testing to make sure that the system followed the rules around how to use that money and how to report. Ben alluded to all of the reporting that the system office has had to do related, and all of the campuses have had to do. So the state auditor is looking to make sure that the universities and community colleges followed all of those rules as well. So it's like a double audit of making sure that they're spending it correctly and following the compliance.
I'm glad to hear that. Thanks, Claire. Thanks, Elise.
Okay.
So I think just to close out the required communications, we had a few other slides in our materials, but and my favorite is slide, I guess in the PDF that you all have attached to the invite, it's slide 11 of 215. Luckily it was early on in the deck, and it talks about the summary of adjustments, and it basically says none noted across the board. That was my favorite slide.
First time ever.
Yeah,
Mine
I
too.
love that. So, no internal control matters to communicate, really nothing else. We did include some industry updates for your consumption. Generally still challenging times for higher education, particularly public universities. A lot of consolidation is going on. I know you guys are going through your process here in Connecticut. But I think with all of, again, going back to all the federal funding, that has really had a huge impact, particularly on public universities, as well as some of the smaller private liberal arts that were very, geographically concentrated, or a niche schools, that have helped them kind of get through the pandemic. But I think we're going to have to see what happens in FY23 and beyond, when the federal funding for related to pandemic kind of ends, and the rubber hits the road with challenges related to enrollment, international students, continue. Inflation is hitting colleges and universities, no worse than other industries, but still it's pretty tough for everybody. So not a rosy picture quite yet, but I think opportunities to continue to flourish. So that concludes our presentation. A pleasure as always. And again, we expect to issue our reports sometime next week before the holiday break.
Sounds like a plan. Thank you. Linda?
I think we're moving on to Cone Resnick.
Okay.
Good morning. I don't know if we can really follow that. There's nothing quite like a clean across the board audit report to just set the standard. And ours is clean as well, but it was not quite as magnificent, obviously, as the system-wide audit. But we did complete the construction audit for the fiscal year ending June 30th of 2022, as discussed earlier. Fieldwork was done over the summer, and we are really just waiting for this meeting to be able to present the final results to all of you here today. It was a clean audit. We are issuing an unmodified opinion. There were no issues noted, no control matters noted. There were no disagreements with management. Everything went really very smooth. Yes, we're always very happy for that. Does anybody have any questions regarding the construction audits?
I don't.
I don't either.
Great.
Again, it's encouraging to see what you're reporting on.
Yes, it's always very nice when you are getting basically a clean bill of health across the board from all of your auditors. That's a good day.
Mm-hmm.
That's a very good day. And ours was just a small piece, being that it's just the construction, and but it was nice and clean, no issues noted, and as Claire stated, the next year is going to be a little interesting to see what things look like. I know deferred maintenance is definitely, never mind new construction, but just trying to budget for and fund deferred maintenance right now in this environment with escalation, and it's been a bit challenging. So hopefully that's not too much of a thorn in your side right now, but it will be a little challenging. Every campus right now is just struggling with that. How do you budget for your projects and keep projects within their defined budgets when the budgets are just, we have projects that were budgeted out, say, in January at a $50 million renovation, and they come back in April at $72 million for the same work before value engineering. So it's really definitely very challenging times right now.
Any questions, Rick?
No, Elise, thank you.
Okay, Melinda and Ben, any other issues that we need to discuss?
No, that was the last item on the agenda.
Wow, this goes on the record. I think it's been a long journey, but I can't tell you how pleased I am that we are where we are today.
Yeah.
This is very different than where we were perhaps 5 years ago. But again, I just want to underscore what Ben said before about the hard work that all of you put into getting us to where we are today. And I know we have some challenges from a financial perspective, but just the fact that we were able to go through these audits, come in on time, have no issues from either of the auditors, I'm very, very pleased.
Yeah. And Elise, can I just add that I've always felt that, one of the biggest parts of my responsibility as a member of the Board of Regents is to protect our reputation. And to me, the way we use the public's money, taxpayers' money, is among the very most important ways to signal that we're responsible and that we're carrying out our mission in the most in the most responsible way. So this is to me, this is a really important meeting and really important news to share with the rest of the world. So thank you.
So with that, I am going to make a motion that we adjourn.
So moved.
So
Okay.
we are adjourned. Thank you all and happy holidays.
Thank you very
Thanks,
much,
guys.
Elise.
Happy holidays,
Thank you.
everyone.
Bye-bye.
Thank you. Bye-bye.
Bye-bye.
Thanks.